From the studios of Farm Journal Broadcast, this is AgDay.
A food delivery disaster, how a trip to the lake turned into a police investigation. Where are farmers getting a majority of their income? A look at some of the sobering new numbers. As USDA releases a bunch of new information about the 2024 harvest, sending the grain markets into overdrive.
But this report was more friendly than just about anybody had expected.
Team coverage on all of the numbers and what they mean going forward right now on AgDay.
AgDay is brought to you by Pioneer. Pioneer brand corn has game-winning statistics like a 10 bushel per acre yield advantage. Pioneer brand corn, your best year starts here.
Good morning, I'm Clinton Griffiths. Corn and soybean markets seeing a big boost in last week after USDA released its final estimates for the 2024 crop. The final production numbers for corn and soybeans coming in well below what was expected. Now let's dig into the numbers. Corn average yield now estimated at 179.3 bushels per acre, still a record high and 2 bushels above 2023, with production estimated at more than 14.9 billion bushels, which is down about 3% from the previous season. Now for soybeans, yield came in at 50.7 bushels per acre. That's up just slightly from 2023. Production totaling 4.37 billion bushels, up 5% from a year ago. And those smaller crops leading to smaller ending stocks. These are also below what the trade was expecting. Corn at 1.5 billion bushels, down 198 million. Soybeans at 380 million bushels, down 90 million. And wheat at 798 million, which is actually up 3 billion, which is also up 15% from 2023. AgDay's Michelle Rook joins me. And Michelle, what stood out most to you in these reports?
Clinton, USDA's January reports were a game changer for soybeans, but even more so for the corn market. In the final crop production summary, USDA slashed yield production and ending stocks for both crops well below previous reports and below expectations. The key now is, what will it mean for prices? USDA shocked the market by lowering corn yield nearly 4 bushels per acre and production by 275 million bushels with dryness late season and at harvest. With just a 25 million bushel drop in demand, the agency also cut ending stocks by nearly 200 million to 1.54 billion bushels, which is a game changer.
The market had very clearly been discounting some friendly numbers ahead of the report, but this report was more friendly than just about anybody had expected. They took the corn yield from 183.1 nationally for last year down to 179.3. They did adjust harvested acreage a little bit, but the end result was a crop size that was 276 million bushels smaller than what they had previously reported.
Demand has also been strong for corn and supportive to prices. However, analysts say reaching $5 corn may be difficult as the market will be limited by farmers selling, talk of higher acres, plus the soybean market and chart resistance.
The market went right down to the technical downtrend line and stalled out. Now the question is how much further we're going to go. The bean market will be the anchor on the complex going into 2025.
Soybean yield was also cut 1 bushel per acre with the extremely low moisture content at harvest, resulting in a drop in production of 95 million bushels. Now that dropped ending stocks by 90 million to 380 million bushels. While it's a positive move, the story isn't as bullish fundamentally for beans.
It was a little bit friendlier for old crop, but the world situation is still kind of an anchor on the whole complex. You've got these big South American crops expected, big, healthy global balance sheets for soybeans.
USDA chose to leave South American production unchanged in the report, as it may be too early for the agency to make adjustments. However, early projections still indicate a record soybean crop in Brazil may make up for any problems in Argentina.
But I think 9 out of 10 traders are looking for that crop to get bigger. So the northern part is a little bit wet, but overall it's looking good. Southern Brazil is a little bit dry. But, the forecast right now I'm seeing is as we get to the latter part of January and February, the rain is supposed to come. They're going to, I think at this point, Michelle, have a huge crop, 172 to 175. That'll more than offset what we lost here in the U.S.
And that combined with tariff fears may serve as headwinds for the soybean market moving forward and create a tug of war between corn and soybeans. I'm Michelle Rook reporting for AgDay.
All right, thanks, Michelle. And a quick update on the cotton crop. USDA estimating 14.4 million 480-pound bales in 2024. Now that's up a whopping 19% over 2023, but the yield is estimated at 836 pounds per acre, and that's down about 63 pounds from a year ago. Harvested area at 8.3 million acres is up 28% over 2023. We have much more about all of these reports over at agweb.com, and Michelle will have more on the impact to the market coming up. While markets were watching 2024 production, the Biden administration also released guidance on the 45Z biofuels production credit. The Treasury Department and IRS releasing a notice of intent to propose regulations and a notice to provide the annual emissions rate table. That rate table will give taxpayers a method for determining the life cycle greenhouse gas emissions of their fuel. Now, it says the Department of Energy will release its so-called GREET model for determining those emissions rates in the coming days. The tax credit is geared toward producers of cleaner transportation fuels, including biodiesel and sustainable aviation fuel. Now, the Renewable Fuels Association says the notice begins a 90-day comment period that leaves major decisions on the future of the 45Z tax credit to the incoming Trump administration. A snowy and cold weekend across much of the U.S. Is more snow on the way this week? We get an update from meteorologist Jack Van Meter.
Taking a look at the forecast, we can see that we're going to start off today and actually this week a little snowy, then almost shut off the winter weather for at least a good portion of the week. Are going to be seeing some Gulf moisture, going to be down in the deep south, but also watching this Clipper system that is slowly but surely going to move off and into the east coast. Then on Tuesday, tomorrow, we are going to be dealing with an Arctic front that is going to be rushing down from Canada, really cooling folks down from the Dakotas all the way off into the eastern seaboard. That's going to be a little moisture that's attributed there. And as we can see again, that's going to be drifting off into the east. And then take a look at this. By the middle of the week, the sky's really going to start to clear out because we are going to be dealing with a high pressure situation. And folks, pretty much to the north and east are going to be the only people in the states looking at rain. And the snow and cold have finally arrived in Nebraska. Jacelyn Wilson of Lakeside sharing this photo with us. She says at the time this picture was taken, it was 5 degrees. But as you can see, she's doing everything in her power to keep her cattle well fed. I'll have more in your forecast coming up.
We have a new snapshot when it comes to farm income, courtesy of the latest USDA America's Farms and Ranches at a Glance report. Now, one trend is showing that while farm income generally exceeded those of other U.S. households, the majority of farm households had farming losses and were getting the majority of their income from off-farm sources.
Over half of farm households received negative net farm income, so that is net of expenses. And so that does kind of imply that they're relying on off-farm sources for some of their income.
Reliance on that off-farm income varies among farm households, from 99% of households associated with off-farm occupation farms to 11% of households that were the principal operator of a very large farm. Can Friday's grain market bump hold? We'll talk about what's influencing those markets coming up next. And later, we're off to the frozen shores of Wisconsin, where food delivery gone wrong is raising eyebrows and plenty of questions in the country.
AgDay is sponsored by Germinator Closing Wheels. Germinator steel closing wheels, perfected in conventional, excels in no-till. Order 12 to 16 rows today and qualify for free shipping or 20% off an end zone moisture management package.
A rough start to the fiscal year for Global Agribusiness Cooperative CHS, the company posting a 53% drop in earnings. It's reporting net farm income of more than $245 million and revenues of $9.3 billion for the quarter that ended November 30th. But that compares to net income in the first quarter of last year of almost $523 million and revenues of over $11 billion. Now, the company says it's seen a decrease in selling prices for grains, oilseed, and refined fuels, which led to lower revenues, along with lower oilseed crush margins. Corn and soybeans roared higher on Friday after USDA's big data dump. But can those numbers hold up this week? We get more from AgDay's Michelle Rook in Markets Now.
Corn and soybeans sharply higher on Friday after the big January USDA reports gave us a bullish shock. Sean Hackett with Hackett Financial Advisors is back with us. Okay, let's talk about corn. This was a game changer, ending stocks down to 1.54 billion bushels. But can we get above or to $5 even on this corn market, do you think, Sean?
We might be able to get some momentum early next week, to the $5 level or in the 490s, but I really don't believe this is enough to get us over that $5 hump. Before too long, we're going to be projecting a large number of planted acres for corn based upon the corn-soybean price ratio. And fundamentally, it's going to be very hard for the market to pencil out why they need to price corn over 5, at least at this moment in time with where we stand today. Bullish report, but not to get over 5, in my opinion.
Because you think a lot of this was already baked into the price.
Well, we're 85 to 95 cents off the August lows, Michelle. So, of course, the market started figuring out that smaller crops keep getting smaller. We were seeing spreads and cash prices and things that normally happen when it says the market's much tighter than is led to believe. And so I'm not sure that the way the market was trading, that this is too much of a surprise. But obviously, there's always some speculators that come in looking for short-term opportunities.
Soybeans got above some chart resistance on Friday with the 380 million bushel ending stocks number. But it's not as bullish of a picture here for soybeans. So how much higher can we go there?
We've been eyeing the July contract and feeling that the $10.5 to $11 overhead resistance zone for the July contract for soybeans would be the best. We actually hit 10.5 today on the intraday and closed near there. With a very substantial crop harvest underway now in Brazil and selling that's likely to be aggressive with the Brazilian real as weak as it is, hard for me to imagine that we're going to be able to see or be able to realize a U.S. price that exceeds $11. And even then, that might be a stretch.
Thanks for joining us. As always, Sean Hackett with Hackett Financial Advisors. We'll have more Ag Day coming up.
Watch Markets Now with Michelle Rook on the Farm Journal YouTube channel, keeping you updated throughout the day on the markets at the open, midday, and close. Find out what moved the markets today and what to expect the market to do next.
Temperatures this afternoon are really going to be cold for portions of the central north. As we can see, 4 degrees for a high temperature up there in Minneapolis and 6 degrees up there in Bismarck. And what this is going to be is the beginning of that Arctic push of air that I just talked about is slowly but surely making its way down south. And as we can see, further expanding down for the evening and overnight hours. Tomorrow morning, Chicago will be feeling the chill, 7 degrees, and so will Cincinnati. Again, really expansive low pressure that is slowly but surely moving down. And again, not a lot of moisture with this system just because it is so cold. Cold air really can't hold a lot of moisture. But on the flip side of the coin, going to be dealing with temperatures in the 40s for South Texas. So they're going to be getting that cold shot as well. And tomorrow afternoon, again, just really, really cold temperatures for much of the Great Lakes states, moving off to the northeast and slowly but surely warming up for the southern states as well. And again, here's that deep diving low that is bringing this blast of Arctic air. And we've seen actually a few of these Arctic fronts this winter. One of the main reasons why we've been below freezing for quite some time, especially for portions of the Dakotas and also parts of the Midwest as well. Here's that big low, and as we can see, really going to start diving down and digging that trough out there. That being said, on the flip side, looking at some pretty large ridging. Again, the main reason why we're not really going to be seeing any huge systems try and make their way through the country. That being said, looking like Friday where that trough, or excuse me, that ridge starts to break down a little bit. Here's that temperature outlook. Again, a lot of the country, especially the west, going to be right around average. A little cooler than average, Southern California and portions of Arizona there. And as we can see, for the central part of the country, really cold as well. Forest City, Pennsylvania, 24 degrees, low of 21 degrees. Spencer, Iowa, 17 degrees and a low of -1 degrees. And finally, Carson City, Nevada, 42 degrees, low of 19 degrees.
We know ag equipment prices are down, but how do those prices compare with previous years? Machinery Pete breaks it down for us next. And later, a special delivery gone wrong, the story behind a fisherman's request, a frozen lake, and an arrest today in the country. More numbers into our newsroom. This time, the Association of Equipment Manufacturers Tractor and Combine Report with 2024 numbers. And as you can see, everything was down. Under 40 horsepower tractors were down 14%, 40 and under 100 horsepower down almost 10%. 100 plus horsepower, they were down 17.5%, while four-wheel drive tractors, the best performing of the bunch, down 4.5%. And look at combines, down more than 24% in 2024. Machinery Pete loves numbers, and one thing he's been keeping track of is how used equipment prices are trending year over year. Here's Pete.
Well, folks, end of the year, start of the new year, kind of the perfect time to stop and assess where we're at here with the used farm equipment market. And definitely, I think the word of the year for 2024, no doubt, was recalibrating. Late model used values fell pretty hard off all-time highs in 2021, 22, early 23. Now, if we pull back a little bit and look at history, here's an interesting chart. This is from our Machinery Pete Used Values Index report I've been doing for many, many years, mostly for the Wall Street crowd who keeps bugging me looking for trend analysis. But it's interesting. On this chart, this is kind of my attempt to give you a temperature reading on the used farm equipment market over the decades. And on the left side of the chart, it's a 1 to 10 rating scale. Pretty simple. When I started doing this thing decades ago, I considered 6.0 to be what I considered stable or normal used values. Now, as we look at the graph over the years, it's kind of interesting to look at some of the up points. So in 2004, it's a little hard to remember now, it's been over 2 decades, but that's sort of when China became modern China. They were starting all this building, anything and everything, and the price of steel shot up. And of course, that affected the cost of new equipment, and that pulled up on the value of used equipment. And then we got to late 2007, of course, and that's when the ethanol tidal wave hit, the boom. It was like a light switch. Used farm equipment values shot higher instantly. It was unbelievable. And we sort of stayed at an elevated level of high used equipment values from late 07 into early 13. But that brings up the period that I'm focused on right now, folks, which was that period from mid-13 to the end of 15, because that was the biggest drop in late model used farm equipment values that I've seen in my 35 years, nothing close to it. And the key component there was that took about just over 2.5 years for large late model used equipment values to kind of find some footing. They fell like a rock in 14 and 15, but again, by the end of 15, they sort of found normal depreciation rates. So right now, 2024, to me, was kind of year one of this current downturn. Now, will this downturn take 2.5 years like last time? You could argue there's a few structural differences that might make the downturn shorter this time, but we'll talk about those on upcoming episodes here of Ag Day.
All right, thanks, Pete. Well, he knows it's good to have the right equipment in the right environment. But what happens when that's not the case? A frozen lake disaster next. This time of year, lots of folks are out on lakes and ponds doing a little ice fishing. And when you're out there waiting for the fish to bite, you get a little hungry, right? Well, one ice fisherman in Wisconsin did, so they decided to get some food delivered to them. But it didn't exactly work out for the delivery guy. The Shawano County Sheriff's Office had to respond to a report of a van breaking through the ice and falling into the Shawano Lake. Turns out it was the food delivery guy's van. Now, he made it out, but apparently just walked away from the scene. Rescue crews were able to find the guy, and he was taken to the hospital to be checked out, but it doesn't end there. After being released, he was arrested on an outstanding bond. Meanwhile, as of Tuesday, the vehicle was still stuck in the lake. The sheriff's office says this should serve as a reminder to everyone that ice conditions can be unpredictable and that even a small crack in the ice can lead to a dangerous situation. And that's all the time we have this morning. We're sure glad you tuned in. From all of us here at AgDay, I'm Clinton Griffiths. Have a great day.